Welcome. Thank you for attending our Telecom Labor and Benefits Allocation webinar. I am Christy Summers. I'm a CPA and Senior Manager in the Audit Department of Costerisan and have been working with telecommunications, accounting, and auditing for almost 17 years. With me is Barb Presick. She is an associate in the Audit Department of Costerisan, and she has been working with telecommunications, accounting, and auditing for over 20 years. We are going to cover the following topics. I will be discussing direct labor charges and the importance of proper time reporting, and will briefly note some other types of direct charges. Barb will be discussing and defining the types of indirect charges that are allocated during the labor and benefit allocation process. I will note the types of direct and indirect charges that are to be excluded from the allocation process, and we'll walk through a clearing process, including some examples. Per FCC Part 32 regulation, costs are to be allocated and recorded based on their function. This includes both direct and indirect costs. Direct and indirect charge labor and benefits are included in these costs, which are also required to be allocated by function. So our focus today will be on these direct and indirect charge labor and benefits and the allocation process. Direct charge labor can be both capitalized labor and expensed labor. Capitalized charged labor are those labor hours that directly affect your capitalized plant, property, and equipment. Some examples include employee time spent working on new construction projects, including work orders, and time spent retiring or removing large or small portions of plant, property, and equipment. Expense charge labor are those labor hours used for all other functions. Sometimes these charged hours can affect your capitalized plant, property, and equipment. These are the hours primarily spent on maintaining and minor repairs and replacements of your plant, property, and equipment. Determining if these charge hours are expensed or capitalized is mainly based on a company's capitalization policies. Other expense charge labor also include used in provisioning, testing, engineering, and etc. that are not directly related to a specific project. If time spent on these functions relate to time spent directly affecting your capitalized plant, property, and equipment, they should be recorded as capitalized charge labor as noted in the previous slide. All other time not related to the items already discussed are typically expense charge labor relating to general and administrative functions such as accounting, customer relations, executive, external relations, etc. So let's go through a simple example of what is capitalized direct charge labor hours. We'll assume that the company is deploying fiber to the home for the first time. The employee was asked to install 1,000 feet of buried fiber optic cable on Michigan Avenue for the fiber to the home project. The employee spent 4 hours installing the fiber. Because the project is considered new construction, which directly affects your capitalized plant, then the employee's hours would be considered capitalized labor hours. Now an example of expensed direct charge labor hours. Let's assume this company considers any cable replaced or repaired of less than 100 feet to be maintenance work. The employee is asked to replace 30 feet of aerial cable that had been damaged during a storm. Because the employee replaced less than 100 feet of aerial cable, the employee's time spent on working on the replacement would be recorded as expensed labor hours. In a scenario like this, it is important to know what the company's capitalization policy is. For example, if this employee was asked to replace 300 aerial cable, the labor hours would be capitalized labor hours and will be recorded as cost of removal in the company's capitalized plant, property, and equipment accounts. So how do we know whether or not the employee's time is capitalized or expensed, and what account to post the time to? This is where timesheets come in handy. Timesheets and proper time reporting are key to determining the best allocation of labor and benefit expenses. And why is this? Well, first and foremost, to comply with FCC rules of allocating expenses by function. Timesheets will help you to determine what functions each employee has performed and how much time was spent on each function, and also to help you properly capture regulated and non-regulated labor expenses. For those companies with cost recovery, proper allocation of expenses drives the recovery of regulated investments and expenses. As Barb will discuss in a moment, benefit expenses follow the booking of labor expenses. Proper allocation of labor is important for how benefits and overheads will be allocated. Proper allocation provides also for accurate financial statements. Financial statements are used to assist in obtaining external funding, for information on the stability of the company, and presents a clear and accurate financial picture of the company. If costs are not properly allocated, you may be making significant financial decisions based on inaccurate financial statements. Let's assume a company does not have proper timesheets. When they allocate their labor and benefits, they are using a percent allocation, not based on time hours. They have one employee whose annual labor and benefits are approximately $100,000, or about $50 an hour. And the company is assuming 30% of this employee's time is for general and administrative work, so approximately $30,000. If the company had used timesheets, they would have known that this employee had only 400 hours spent on general and administrative work, which at $50 an hour would be $20,000. Therefore, by not using the timesheets, they have overstated their general and administrative expenses by $10,000. This overpayment could negatively affect all of the items that are listed on the slide: compliance with FCC rules, proper capture of regulated and non-regulated expenses, more accurate financial statements, maximum recovery of costs, and proper allocation of benefits and overhead. So how are our labor charge hours captured? Well, first, our timesheets are going to give us our raw hours. This is the direct charge labor hours. Our payroll system will load the labor benefits, as Barb will discuss in a moment. And lastly, the allocation will distribute the labor and the benefits as capitalized or expensed. Again, our timesheets capture your raw hours, which drives the rest of the allocation process. The more detail, the better. Create the timesheet to reflect your company's functions. Using Part 32 account numbers, which correspond to your chart of accounts, and work order numbers or work order descriptions, is considered best practice for timesheets. Don't forget, this is also a great place to capture materials used on work orders and repairs. Here we have a simple example of a timesheet format. Timesheets can be done daily, weekly, or any other format that works for your company. This timesheet is an example of a daily timesheet. We have the Part 32 accounts 6112, 6423, and 2003 across the top, and the work order number or project description down the side. The employee on this timesheet worked 4 hours on work order number 120 and 4 hours on repairs for vehicles and cable for an overall of 8 hours for the day. So for this employee, their payroll and benefits will be allocated based on 2 hours to account 6112, 2 hours to account 6423, and 4 hours to account 2003. Although our focus today is on labor and benefits, there are other types of direct charges that typically get allocated by function, such as materials and supplies, contracts, permits, insurance, AFUDC, and transportation. This list is not all-inclusive. Now at this time, I will turn the presentation over to Barb, and she will discuss indirect charges and the clearing process.
Thank you, Christy. This brings us to indirect charges. There are two major types of indirect charges: benefits, which are company paid, and expense charges, which includes employee hours. It's good to note here, although Part 32 recommends clearing these accounts, they are not always cleared to a zero balance. We, however, go with a conservative approach and clear the accounts to zero. Benefit. Examples of company-paid benefits are non-productive paid time off, vacation, and/or doctor's appointments are included. Payroll taxes, employee portion of Social Security and Medicare, workers' comp, state and/or federal unemployment charges. medical and dental, and disability and life insurance policy payments, not to be confused with disability payments paid directly to an employee, but we will cover this later in the presentation. Pension benefits or 401k, SEP or simple IRAs, and other post-retirement benefits like health insurance paid on behalf of retired employees. Okay, now on to expense charges. Examples of expense charges are motor vehicle expense like maintenance, car washes, fuel, aircraft expense for those who own a plane for company use. Be sure to include hours for the pilots. Tools and other work equipment expense, maintenance on other work equipment, and the incidental tools to carry out that maintenance. You should include employee hours to complete the maintenance with this as well. Plant operations, administrative expense, and engineering expense not directly related to a specific job or project. The direct engineering costs would be initially placed in plant under construction and then capitalized when this is placed in service. Benefits clearing accounts. Generally, benefits follow where corresponding labor was posted, like Christy stated earlier. Whichever accounts were used to post the labor costs, that is where your benefits will most likely be cleared. Benefits clearings are allocated to accounts based on the total and individual payroll amounts posted. We'll go over this more in detail later. Clearings should be allocated on a monthly basis. Although this is the recommended duration to clear labor and benefits accounts, we know many companies who perform this task on a quarterly basis, and it works for them. A good rule of thumb is remember to complete the labor and benefit clearing whenever you are preparing interim financial statements. Benefits clearing exceptions are telecommunications plant charges from corporate operations, for instance, executive charges like board fees, board meeting costs, accounting, finance, legal, whether external relations or internal matter. These include expenses when you pay your CPA firm or attorneys. Other general and administrative expense or general liability insurance, cell phone bills for executives, other incidental miscellaneous expenses are included. Company phones, where you have phones in your offices and you are basically considered a subscriber. Just as any other subscriber, if you use phones in your offices, you are required to charge as an expense the normal subscriber fees associated with providing the service, just as you would to an outside subscriber. Meals and entertainment, or costs associated with like taking a vendor to dinner or a prospective customer for an outside job. Benefits clearing exceptions continued here. Other general and administrative. Company-provided lunchrooms as an example. Settlement of accident and damage claims. Direct payment to retired employees. Disability payments. Like I stated earlier, this is not to be confused with disability insurance policy payments. This would be disability payments that the company pays directly to an employee. Death payments. Again, not to be confused with life insurance policy payments. Supplemental payments to employees while under government service, like military leave. This would also include if an employee was out on jury duty, but you still pay them for their day. Now we can get into benefit clearing examples. Here we have Example Telephone Company, Inc., or etc. Inc. They record their payroll-related expenses for any given month as follows. We have the accounts for payroll taxes, medical, dental, life insurance policy payments, pension contributions, long-term disability benefits. As such, $20,000 for payroll taxes, medical, dental, $10,000, pension contributions at $8,000, long-term disability benefits at $15,000, which totals $53,000. Now, again, noting that only $38,000 is included in the clearing amount. Long-term disability benefit payments are excluded expense for benefit clearing. Here we have etc. Inc. posted payroll amounts. Posted to account 2003, planned under construction, $100,000. 6423, buried cable maintenance, $50,000. 6610, marketing, $10,000. 6721, accounting and finance, $20,000. You can see the allocation based on the percentage at 55%, 28%, 6%, and 11% accordingly. We've got a total of $180,000 of payroll posted. Here we give an example of a benefits clearing journal entry. For plant under construction, we would take that $38,000 of allowable expense to be cleared, and we would allocate 55% of that to the plant under construction, totaling $20,900. We do the same for buried cable maintenance, but at 28%. That would allocate $10,640. With marketing, we're at 6% of the $38,000, $2,280, and accounting and finance, 11% of the $38,000 at $4,180, totaling the $38,000 of allowable clearing expense. Now we can move on to plant-specific clearing accounts. The following plant expense accounts may be cleared to construction projects and to plant-specific expense accounts. 6112, motor vehicle expense. 6113, aircraft expense. 6114, tools expense. 6116, other work equipment expense. Now we have plant non-specific clearing accounts. The following plant expense account may be cleared to construction projects and plant-specific accounts. Provisioning, 6512, and we'll go into that further later too. Now we have plant non-specific clearing accounts. The following plant expense accounts may be cleared to construction projects only. 6534, plant operations administrative expense. 6535, engineering. Etc. Inc.'s labor distribution, the hours only. We can go through this quickly. Jenny, Oliver, Mary, Joe, and Ken are the employees. Jenny and Oliver are motor vehicle and outside plant. Mary is outside plant only. Joe is general management, and Ken is plant management. You can see their hours across the top. We've got the account numbers. Their hours are going down with a total of 80 hours per employee for that time, totaling 400 hours. Etc. Inc.'s general ledger balance for that period. Motor vehicle expense at $5,000. Provisioning, $4,000. Plant operations administration, $15,000. The materials used, they've posted to these accounts. 6423, buried cable expense, $5,000. 2003, $6,000. Expense clearing examples, clearing of motor vehicle expense to buried cable. So what we would do is, we've got posted into the expense account in 6112, then $5,000. You would take the buried cable hours of motor vehicle operators and divide that by the total hours of motor vehicle operators and multiply that times what the balance is in the 6112 account. So Jenny has 20 hours, Oliver has 10 hours. So take that, divide it by Jenny with the total hours of 80 and Oliver with the total hours of 80, totaling 160. Multiply that number times $5,000. Your amount to clear is $950. Clearing of motor vehicle expense to work order number 1. Expense in 6112 times work order number 1 hours of motor vehicle operators. Divide that by total hours of motor vehicle operators. So again, Jenny has 60 hours. Oliver has 50 hours for this, for the motor vehicle operators. Total hours for Jenny is 80, Oliver is 80. So take the 110, divide it by the 160, multiply that times the 5,000 equals $3,450 to be cleared. In the previous example, no clearing of motor vehicle expense to advertising since it is not a plant-specific expense. No clearing of motor vehicle expense to plant operations administration since it is not a plant-specific expense. No clearing of motor vehicle expense to executive since it too is not a plant-specific expense. Okay, clearing of provisioning to work order number 1. Okay, expense in number 6534 times the total plant hours in work order number 1 divided by the total of plant employees hours. So we've got 190 hours of total plant orders in work order number 1 based on our example earlier. We have Jenny at 80 hours, Oliver at 80, and Mary at 80. Take that 190, divide it by the 240, times the $4,000 in 6534, and that's $3,160. Now we come to the journal entry to clear the motor vehicle expense. So you saw earlier we came up with the $950 to allocate and the $3,450 to allocate out of motor vehicle expense. So we would debit the buried cable maintenance account, $950, because that was what would be allocated to buried cable maintenance from motor vehicle expense. We would credit the motor vehicle expense $950 to reduce that account. Then we would debit buried cable maintenance plant through 2003 for the work order, $3,450, and we would credit motor vehicle expense the $3,450, reducing that account further. The journal entry to clear provisioning expense would be 2003 account, buried cable maintenance planned under construction, $3,160, and motor vehicle expense, $3,160 credit, further reducing. This concludes the indirect expense clearing portion of the presentation. So now I give it back to you, Christy.
Okay, thank you, Barb. Today we've discussed direct charge labor, the difference between capitalized and expense labor, timesheets, proper time reporting, and the importance of time reporting, the different types of direct and indirect charges, such as materials and supplies, benefits, and other overhead expenses, and the allocation of benefits and the items excluded from the allocation process, such as company-provided lunchrooms, disability payments, and payments to retired employees. And we also covered the basics of the clearing process and best practice of the allocation process. So we would like to thank you for joining us today for the Telecom Labor and Benefits Allocation webinar. Our contact information is in the slides. Please feel free to contact myself or Barb if you have any questions. Again, thank you for attending our Telecom Labor and Benefits Allocation webinar, and have a great rest of your day.